Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup and all the market strategies you need to follow for the day. Remember, today is also the first weekly expiry of the BSE contracts after the new rules have taken into effect. However, that could actually take a backseat as most of the focus today will be on the GST rate rationalization announcements that were made late last night and the resultant reactions on several sectors and stocks linked to all of those as well. Let's first understand what happened on the global front. US equities, they ended higher overnight. S&P 500 about 0.5% up in trade. Nasdaq up by over 1%. We also did see that the US Treasury yields, the 10-year yields, they lost about 4 basis points to 4.22%. The dollar index also slipped a tad bit, about 0.2% lower at 98.14. Oil prices, they climbed down by about 2.5% at $67.50 per barrel. OPEC, remember, is going to be in focus as they're going to be considering the output increases on Sunday. So that's going to be in focus as well. Now, markets in the Asia markets this morning, they traded higher right after overnight's tech rally on the Wall Street as well. So the Nikkei was trading higher by about 0.57%. We did see Australia's ASX 200 gaining about 0.6% in trade, although China and Hang Seng were a tad bit lower, especially the China's index that was down by about 1.5%. But look at the others. Nikkei up by 1.2% now, Kospi up by 0.6%, and the Gift Nifty is also indicating to a positive start, at least at this point in time, as well at 24,953 odd levels, at least for now as well. Let me look at what happened on the foreign flows front. So the FIs continued to net sell shares in the Indian markets worth about 1,721 odd crores. Meanwhile, the domestic institutional investors, they net bought the shares worth about 2,679 odd crore rupees. But remember, the biggest talking point for the markets today is the major GST rate rationalization announcement that has been announced, the new GST tax structure, which will be effective from the first day of Navratri, that's from September 22nd, that's starting off the festive season. There's also an expectation of improved affordability to give a fillip to consumption. Remember, two slabs have been completely scrapped now. 12% and 28% GST slabs have been abolished. The new slabs are 5%, 18%, and there's an additional 40% slab for sin goods and for ultra luxury goods as well. Remember, we've also understood that no additional compensation cess above 40% GST rates either remains unchanged or are reduced on most items as well. Let me quickly welcome our guest on board who's joining in on the program with us. Mr. Avinash Gorakshakar joins in to share with us his views on the markets and of course explain to us what this GST rationalization would mean for the markets as well. Very good morning to you. Thank you so much for taking the time out, Avinash, for this discussion. I want to first take up from you. Most of the Business Today news breaks have actually come into the finalization of the announcements made by GST Council last night. Help me understand, since most of it was already being discounted, how are the markets likely to react to this?
Yeah, good morning, Sakshi. I think the GST rationalization is definitely a big sentimental booster for the consumption, kind of sectors. Specifically, if you talk about FMCG, auto, mass product goods like consumer durables, consumer appliances. So I think it's going to be definitely a positive sign because starting September 22, we could see a lot of rural as well as urban demand coming in. And I think once consumption starts increasing, you're going to see a lot of volume growth, in sectors like FMCG, autos, consumer durables, typically, small ticket items. And of course, the government has, also rationalized agriculture, implemented specifically tractors from 12% to 5%. So, these are definitely positive signs. The impact of tariffs which had come in earlier on the Indian economy, I think to that extent, the government has given it a very strong kind of shot to the domestic sectors. My sense is that you will see a good uptick in the market today. But there would be a little bit of profit booking at some time because see basically the GST is a good sentimental booster. We'll have to wait for at least a couple of months to see whether if demand also increases quite significantly because in the very near term you cannot expect consumption to increase by 2 to 3 times just because duties have come down. But nevertheless, it's a good move. I think the full impact would be coming in the fourth quarter of this financial year. And I think for the markets today, the GST would be a big trigger point. You'll see the markets rising quite sharply, but thereafter some profit booking could be expected.
Okay, got that. Let me now just come down to specific sectors and the stocks that could be in focus as well. Let me start off with the auto pack that was already rallying even in anticipation of the GST rate rationalization. This has been one pocket that has faced a lot of headwinds over the last couple of years, and therefore any support coming in by way of reduced taxes from the government could aid the volumes, could aid the sales, and that's why this space has been buoyant as well. Most of the autos will be coming to the 18% slab, whereas only the super luxury ones could probably be in the 40% slab at this point in time. Even two-wheelers below 350cc will attract lower rates right now. EVs, which were also feared that probably be taxed higher, they have stayed still at 5%. So those are the moving parts as far as the auto space is concerned. How are you looking at that aspect, and what's your top?
No, I think clearly within the auto pack, I think tractor companies and commercial vehicle players are definitely going to be big beneficiaries, followed by the two-wheeler sector, because here the duty rationalization has been quite significant. For the smaller cars, Sakshi, I think definitely the duties have come down. But I think if you see the mix of most of the passenger car companies, they are either in the mid-size or the luxury segment. So the luxury segment will continue to be taxed at a rate of 40 odd percent. But definitely the auto component companies are going to benefit. Most of them now come under the lower tax structure. And that is definitely going to be a big booster shot. So I think, for all these price adjustments to happen and possibly to see the volume growth, I would say that, maybe the fourth quarter of this financial year is going to be important. Typically, as everyone is aware, the fourth quarter is always a bumper quarter for the auto companies. So you could expect definitely volumes to pick up, and the cut has come during the festival time. So I think you will definitely see a good pickup in the volume growth across all categories in the market.
Okay, got that. Let me also, focus on one aspect. Avinashji, we had been discussing so much that whether GST rationalization is also being thought about to reduce some impact of the US tariffs that have been imposed on the Indian imports right there. But we did get that clarification coming in from the Finance Minister Nirmala Sitharaman talking about whether that GST rationalization has actually nothing to do with the US tariffs. Let's listen in to what Finance Minister had to say on that aspect.
The tariff turmoil is not a matter which influenced the GST reform, because we've been at it now for more than 1.5 years. Some group of ministers was working on rate rationalization, some other group of ministers a bit later was working on insurance, and so on. And compensation cess was a reality, that it is going to end the moment you paid back the loan. None of this has anything to do with the tariffs. So, no, there's nothing to do with the tariffs at all. One. Second, you were talking about petrol, diesel, 8 states. None of that was subject of our discussion, because that is not part of the GST Council at all. And the third, numbers are being thrown around. This much loss, that much loss. You've just heard the Revenue Secretary detail on the basis of 23-24 numbers. Am I right? 23-24 data, which is the last available for all the categories. And he stated what is the net amount that we'll have to be looking at.
Absolutely. So there you heard it. Avinashji, your thoughts when it comes to, the kind of impact that we've been facing due to tariffs. Most of the sectors that are export oriented have already been feeling the heat of 50% tariffs. Meanwhile, just viewers, look at the pre-open rate. That actually shows you the kind of enthusiasm there is after the GST rate rationalization. Almost a 600 point of a gap up is being indicated as far as the pre-open tick is concerned. 25,209 right now is what is being seen. Let's see whether this settles down a little bit. 2% higher is what the indication is. So clearly the markets are showing us that cheer, with respect to the GST rationalization. Help us understand, Avinashji, how much of the tariff impact can be cushioned because of these GST rate rationalizations back home?
No, I think Sakshi, clearly because the tariffs, impact has come in. I think there has been some thinking by the government that the GST structure needs to be, obviously rationalized. But I think that apart, I think the best part is that rationalization has come in that is going to benefit the Indian industry in a big way. Now coming to the fact that how this GST cut would actually benefit companies who have been hit by the import tariffs. So I think companies which have got 100% exports or which are 80 to 90% of their revenue comes from the export market. For them, the GST rationalization is not going to make a significant impact. It's going to be a tough period for companies from textiles, from gems and jewelry, basically, some pharma companies. Although pharma companies have not been, tariff, they have not been coming under the tariff, angle. My sense is that we have to see companies which are largely present in the domestic market and which have got a large domestic customer share here. And in that category, I think domestic capital goods, cement companies, hospitality companies, hospital companies, insurance companies, auto component companies. I think the basket is quite large. And of course, we cannot forget FMCG, which is a very large kind of product category. So I think companies which are going to operate in the domestic market are going to definitely get a better kind of positioning in the market, because obviously price reducing will increase the consumption trends there. But companies which are largely on the export side, very large companies which are only into exports or where 70-80% revenue comes from the export market, those companies may not immediately benefit from the GST reforms. So I think we'll have to wait and watch for at least a couple of quarters before we see the real impact of GST. Today is a sentimental kind of effect. So this rally in the Nifty which we are seeing, I think we'll have to wait and see how this pans out, because sustainability is very important. The event has happened, market is happy about it, but now the most important thing is how much of it is going to actually drive demand.
Absolutely. Let's also listen into what last night's comments came in from the state finance ministers who were a part of the GST Council meeting. And whilst they, gave all the details to all the media as to what has been decided, one of the key aspects was there was consensus on rate rationalization that has actually come in. And that was clear statement that was also given out by Finance Minister that, of course, there was a long haul discussion that happened throughout the course of the day, but in the end there was nobody who actually had any reservation about rate rationalization. Let's listen into what the state finance ministers had to say.
यूनानिमसली 5% और 18% दोनों अप्रूव हो गए, और रेवेन्यू स्टेट लॉस पर जो दिक्कत थी वो भी अप्रूव हो गया.
नहीं, रेवेन्यू लॉस जो भी होगा फेस करेंगे. लार्जर इंटरेस्ट ये था कि कॉमन मैन को फायदा हो, टैक्स कम हो, टैक्स का बर्डन कम हो. ये लार्जर इंटरेस्ट था, इसलिए सबको यूनानिमसली हो गया.
Finally, apparently there has been a consensus achieved. I want to know if you're satisfied with the fact that even on the revenue loss, ma'am,
we have spoken whatever we had to say. We have to.
Are you satisfied?
Of course, yes. We are all for the common man and middle class families.
Yeah.
So,
But on the revenue loss?
That, apart, that also we brought to the notice of the council.
Sir, big concerns there were about the revenue loss especially. Have they been satisfied now?
जीएसटी काउंसिल के चेयरपर्सन और पूरे सदन की भावना इस पक्ष में नहीं थी कि जीएसटी जो ये कंपनसेशन सेस है वो दिया जाए, वो लोग नहीं उसके पक्ष में थे. तो हम लोगों ने भी अल्टीमेटली कहा कि ठीक है.
All right. So the big talking point, Avinash ji, also has to be understood by way of the impact on the economy. There will be some revenue loss is what we are given to understand for sure. The math that most of the finance ministers, state finance ministers were giving is that upwards of 90,000 odd crore rupees is the total loss, but out of which, because of the additional 40% tax slab, they tend to gain about 45,000 odd crore rupees, and therefore the loss that they will have to incur is upwards of 40,000 crore rupees in terms of revenue loss. So how are you looking at that aspect, and what are some of the issues that still need to be ironed out?
Clearly, now giving a number would be a little speculative part, but I think clearly in the next 2 months, once we see maybe the month of October, October would be a full 1 month of the revised GST structure rates. And that would be a better time to look at the actual revenue loss, because my sense is at least for the next couple of months, it would take some time, for the GST momentum and the run rate to get adjusted. So basically, October and November are going to be 2 months where we'll probably see what is the impact of volume growth, what is the impact of GST in absolute numbers. But I think one thing is very clear: the government was very conscious that it wanted to please the middle class, and I think make products and services much cheaper, especially for product categories like FMCG, insurance, and I think that is the most important thing. So probably, I think the revenue loss will be there. But to give you a clear angle as to whether it will continue for 2 months, 3 months, I think October and November would be better, kind of months where you get the full impact of the revised GST structure.
Okay, fair point. Let me also now highlight for all our viewers some of the key sectors, and maybe let's focus on key sector wise the impact. You can actually look at a lot of those auto stocks that are rallying in anticipation. A Hero Moto, for that instance, Maruti, M&M, these are all rallying in trade. Meanwhile, Tata Motors is also up by about 2%. Look at a TVS Motor, 3.7% higher. So the entire auto basket is definitely cheering this. Let's also look at FMCG and consumer durables. Avinash ji did point out that the entire consumption will be also driven by these two major sectors. FMCG, we've been seeing some pickup take place over the last couple of sessions. Look at a Blue Star for that matter, 4% higher in the pre-open trade from the consumer durables basket. Look at a Voltas, 2% higher. Let's also pull up Havells, Polycab. All of these stocks would also be in focus. From FMCG products, let's pull up a Nestle, Marico, Dabur, HUL. Let's pull up even ITC for that matter. That will be an interesting different aspect to also discuss. So FMCG consumer durables are also doing well at this point in time. Avinash ji, what portion of benefit do you see for FMCG, and what portion of benefit do you see for consumer durables at large? And if you could pick out some stocks from there also.
No, I think clearly, the air conditioner manufacturing companies like a
Yeah.
Voltas or a Star, ODM manufacturers like PG Electronics or Amber Enterprises, these are companies which are bound to benefit, of course, over the medium to long term. And within the FMCG basket, I think companies like Hindustan Lever, Dabur, Marico, I think clearly, it's very difficult to pinpoint what benefits they would enjoy immediately. But I think over the next 6 to 12 months, I think the biggest plus point is that volume growth is now going to kick in. Rural demand has been picking up. The monsoon has been good. Already 2 rate cuts have been announced by RBI. And this GST cut which has come in is all going to ensure that the volume growth now gets more and more stronger. So I think, clearly FMCG as a basket will offer a lot of variety to investors, followed by, the consumer durable segment. Consumer appliances also should do well, especially companies like TTK Prestige. I think one has to
Okay.
always take a long-term view here. I would not be surprised that maybe for the fourth quarter, I think markets should be keenly awaiting the benefit of volume and basically price improvement, because that is a full quarter when the revised USGST structure would be, in focus.
Okay, fair point. The markets have settled higher by 265 points, viewers, right in the pre-open trade. 24,980, a percent higher in the pre-open trade is what you see for the Nifty. All the sectors are indicative of a positive start. It could be autos that could be driving in the fastest lane. Right now in the pre-open, it's settled at 3.5% higher. FMCG about 2.6% up. Consumer durables about 1.6% higher. These are the three sectors that we have discussed first with Avinash ji to get you the benefit there of understanding where exactly the money could be flowing today. Real estate, broader markets also ticking higher, banks also moving up in trade. The oil and gas and IT are the ones which are gaining the least at this point in time, 0.3% odd. But let's look at some of the stocks that could be opening sharply higher in trade today. M&M from the auto pack could be the top mover, 7.3% higher. Eicher Motors, even life insurance names like SBI Life and even HDFC Life could be in focus. HUL is also giving us a sense that it could be starting on the higher zone as well. But let's try and understand, Avinash, where it could be an impact on the negative side. 40% of a slab that has been introduced, and this is for largely the Singh goods and the uber luxury goods, the tobacco, pan masala, bottled drinks, private jets, planes, yachts. Those are the items that have been included there. Help me understand with respect to the key stocks, what should one watch out for here?
primarily near, sectors like, basically the super luxury cars, which most of the companies have been, launching in the market. Those are the products.
Business has been diversified and some benefit can come in from there, but within the FMCG space of ITC, it's the tobacco space, the cigarette space that could be seeing some impact. We'll also look at some of the companies that are into pan masalas, bottled drinks. Let's look at even Varun beverages for that matter to see if there is any kind of an impact on that front. So viewers, will also look at that as well. Let me also highlight for all our viewers that apart from this, we will also be looking at some of the other sectors that could be benefiting, like fertilizers, agrochemicals, for instance. Names like UPL, PI Industries, Rallis India, they are expected to gain as GST on fertilizer, acids and biopesticides is reduced to 5% from either a 12% or an 18% band. So look at this aspect. That will be very important to watch out for. All names like UPL, PI Industries, Rallis, they are going to be in focus. Let's look at renewable energy sector. Remember, this is also standing to benefit with the taxes on solar cookers, solar water systems, all related parts also getting slashed to 5% from 12%. So look at companies like Adani Green, KPI Green, Sterling Wilson Renewable Energy, Tata Power. All of these stocks could also be in focus again. Let's look at textiles and apparels. Those are another one of those sectors that are going to be impacted. In textiles, synthetic yarns, man-made fibers, carpets, rubber threads will see a GST drop to 5% from 12% earlier. So look at all of these home furnishing items that could be cheaper for you. Even garments for that matter. The threshold for the garments is taxed at 5% is proposed to rise from 1,000 to 2,500 rupees as well. So look at that. Apparels priced above 2,500 will move to 18% slab from 12%. The changes could definitely boost the demand for retail players like a V Mart, Vishal Mega Mart, Trent for that matter, Vardhaman Textiles, Arvind, Raymond Limited, Wellspun India. These are the companies that you need to watch out for textiles and apparels today. Let's also look at some of the other key sectors that you should be looking at. Cement for that matter. GST on cement has been reduced from 28% to 18%. Construction and housing costs are set to ease, driving demand across infra and real estate projects. So cement majors like Ultratech, ACC, Ambuja, Shree Cements, these could all be in focus. Dalmia Bharat could also be in focus in today's trading session as well. So look at all of these aspects. Let me also pull up some of the other brokerage houses updates on the GST cuts that have come in. We have a UBS report on GST reforms. It believes the GST rationalization is going to be boosting the sentiments. Reforms are supportive for cement, consumer durables and FMCG. We have a Bernstein report on GST reforms which says GST 2.0 sweeps aside the skepticism about intent and political will behind consumer push. CLSA has said it is positive for FMCG demand, food and HPC products to benefit the most. Top beneficiaries according to them are Britannia and Colgate with near complete portfolio coverage as well. Morgan Stanley has come out with a report as well on GST reforms. It believes GST cuts benefits consumer companies broadly, staples to see the growth and shift towards organized players is going to be seen. Food companies like Britannia, Nestle, Tata Consumer are better placed. Let me also pull up one more report, and this is from Jeffries, which says consumer companies are going to be passing on the GST impact to consumers. It is supportive for both apparels, footwear and staples as well at this point in time. Let's quickly look at the market move then. 24,915, 200 points higher is how we open. The GST chair is getting reflected in the market opening on the Nifty. All the sectors open higher in trade, with auto sector up by 2.7%, FMCG up by 2%, real estate up by over 1%, consumer durables up by over 1%. At least 5 sectors that are opening higher by 1% in trade today. Whereas India VIX is also also up by over 1%, but despite that, all the sectors into the green. Top movers on the Nifty, M&M 6.5% higher, Aisha 3% higher, Bajaj Finance 3% up in trade, Nestle, Ultratech Cement about 2.5% higher. These are the top movers on the Nifty. On the lower end, you have NTPC, that's dragged in trade. Reliance Industries dragging in trade 0.6% odd. Eternal is slipping a bit, about 0.5% lower. HCL Tech, Oil and Gas and Hindalco, these are the spaces that are still lagging. Anything within the PSU space that we can mark out for you? BHEL is higher. You have some oil related stocks like IOC and HPCL. Power stocks like PFC and REC also on the move as well. Let me also look at some of the Nifty 500 names. What is really reacting to the kind of move that is? Kokuyu Camelin is up by about 8% odd. Niva Bupa Health Insurance. Remember, insurance has been exempt. Individual life and health has been exempt from GST. That's another aspect that we could discuss with Avinash in a moment from now. We have Britannia that's higher. We have names like Parag Milk Foods that's higher by about 7% odd. Dabur is up. DOMS Industries. Remember, stationery. A lot of education related items have been exempt from GST. So that's also another key aspect that we could be looking at. Those are all the names that are buzzing in trade. Avinash ji, what ticks your attention right at the open? We are opening higher in trade, 24,900 right at the open, and many sectors reflecting the cheer of GST cuts.
So as I mentioned to you earlier, Sakshi, I think, the sustainability of the move is very important. I think markets have obviously given a thumbs up to the GST cuts, and I think that was widely expected. I think obviously, numbers are going to improve for a lot of consumption sectors, as we mentioned earlier, FMCG, auto, typically consumer durables, consumer appliances, cement. But I think all that, to get reflected in numbers is going to take a little bit of time. I think the near term, I think the market should, be more glued on the narrative. I think, frankly, in the second half, we could see a little bit of profit booking because, after these announcements, the markets would like to see finally what is the earnings impact. So we'll wait and watch. But I think, yes, the government's initiative has been quite positive. And I think the markets have greeted it with a thumbs up. I think we'll have to see how long this gets sustained. But maybe after a couple of days, we could see a little bit of profit booking also kicking in.
All right, Mitesh Panchal is also with us now, joining in on the program with us to help us understand the technicals. Mitesh, warm welcome. Good morning to you. Thanks for joining in as well. Tell me, how are you looking at the markets technically reacting to that GST bonanza that has been announced?
This is much needed boost which the market is looking for, because since last so many days we are in a broad consolidation zone, and since last 3 days typically on the chart we are forming a heart of high bottom formation. So yes, this is a much awaited boost which we are anticipating, and we got it. So now the question is that whether we'll be able to sustain above the psychological level of 25,000 or not. We are of the view that sooner than later the principal headline index Nifty will cross 25,000 and sustain above this. We don't think so that the trend will fizzle out going forward. Same is the case with Bank Nifty. Since last 2 trading sessions, we are seeing a promising signs in the entire PSU bank as well. So we are of the view that net now, since the Nifty IT has stabilized, we are of the view that both Nifty bank and Nifty will take the front seat, and going forward we see a very serious trend reversal. Our first target is 25,000. Post that, we are looking at 25,200 and 25,500. So at this gap up, what should one do? Should we get into and buy? The answer is absolutely yes. One should definitely buy this gap going forward. And we are of the view that as the day progresses, we will build on to the gains and probably close the day with a gain of more than 1.5%. So we are very clear as of now that the much awaited boost has happened. Since last 3 days, we are getting a comfort as far as the daily and the hourly charts are concerned of the principal headline index. And we are of the view that one should buy this gap, and going forward 25,200, 25,500 is achievable.
Okay. Avinash ji, cement space is also, standing to benefit from a reduction of GST rates from 28% to 18%. So help us understand, how are you looking at it? Would you go with the pure play cement names there? Do you also think construction, housing names can also be looked at on a positive end then?
Yeah, definitely. See, I think larger players like Ultratech, Ramco, Heidelberg Cement, I think definitely look quite promising. And I think if you talk about housing finance companies, LIC Housing Finance or maybe
Yeah.
SDFC, these are also companies which definitely will get a big booster shot. I think clearly, most of the, building product companies like Kajaria Ceramics or typically, most of the, ancillary kind of plays like paints also would get a significant boost. So I think we'll have to wait and watch. But yes, I think one can definitely look at these sectors from more of a long-term structural positive story now, because I think the full impact is going to come in the next, maybe in the third quarter and in the fourth quarter of this financial year.
Okay. Mitesh ji, how about the textiles and apparel stocks? So far we were talking about the impact of tariffs on these spaces particularly. Now they have a domestic positive trigger coming in. Most of the textiles will see a drop to 5% from 12% earlier. And, when we talk about synthetic yarns, man-made fibers, carpets, rubber threads, they will drop. Even apparels, which are lesser than 2,500 rupees, will also see the benefit of a lower tax slab there. How are you looking at the retail giants, textile names? Which are your top stocks there?
See, as far as the textile is concerned, I think we will not go with the typical textile name, but I think trend is looking pretty promising on the chart going forward. And within the textile, I think it has nothing to do with the current GST because the company has to do a lot with the international market. So I think Ambika Cotton Mill is what we are looking at. So Ambika Cotton Mill and Trend is the two preferred stock technically, which one can buy even at the current rate.
Okay, fair point. Let me also just grab some more sectors that we could be discussing now. Avinash ji, I also wanted to discuss with you some footwear stocks. How are you looking at footwear stocks particularly?
So I think within the footwear space, I think players like Bata, Campus, I think definitely look quite promising because with the duty cut, definitely the consumption trend will increase. I think these are also well established companies with very good business models. I think when pricing cuts happen, I think it obviously encourages people to buy more products and services. And I think to that extent, definitely these are structurally positive stories where I think probably in the next 6 to 12 months, hopefully the market gives them a better kind of volume growth that is going to improve their profitability going forward.
Got it. Mitesh ji, how are you looking at some of the education related stocks and those in the stationery players? They're also going to be seeing some benefit coming in. Most of these stationery items have been exempt from GST to make affordable education accessible to most people. How are you looking at names like a DOMS, for instance, and any other names that come onto your mind right here? Mitesh ji, I think you're on mute. We couldn't hear you.
Yeah. Sorry. So DOMS is one thing which we are looking at. So even if we look at the entire chart pattern, from the level of 3,000 plus, it has corrected significantly. And since last few trading sessions, actually it's a heart of our bottom formation. So what we are looking at is 2550 to take it out. Once the
Okay.
stock crosses 550, the stock will enter into a new trading.
Okay, so DOMS and viewers, you can also look at an Navneet Education, Kokuyu, Camlin, Flair Writing, maybe Link Pens as well. All of these stocks could also be in focus on the back of the stationery names there as well. All right, Avinashi, I'll also come to you with respect to the insurance sector that we haven't touched base upon as well. Both individual life and health insurance have been exempt from GST. Not just that, even reinsurance has also been exempt then. How are you looking at the aspects there? I think one of the key concerns that the insurance sector had was whether they will be able to make insurance affordable if the input tax credit is completely scrapped, and whether it will in fact turn out to be more expensive for the end consumer if the life and health insurance premiums are taxes are brought to zero. They were more favoring about 5% GST, but how are you looking at the reinsurance bit also being now taken care of? Will that ease some pain?
No, definitely, it is a big sentimental booster shot, and the government seems to have understood that healthcare is a very vital, element for the masses. So I think now the duty cut is virtually not, zero. So my sense is that players like ICICI Pru, SBI Life, or for that reason Max, these are companies which are definitely going to benefit. In fact, all the companies will benefit. In the reinsurance market, GICRE, which is listed, also should definitely take a positive kind of upbeat kind of performance going forward, because for them the volume of the opportunity is pretty large, and now this is definitely something which is going to help them for getting clients in the domestic market. So I think you'll see a very strong run rate in the second half of the financial year for most of the insurance companies, and I think investors should look at this sector from a slightly medium to long term angle. Maybe a quarter on quarter growth may not be the right way to look at it, but over the next 6 to 12 months you're going to see a lot of business coming in, because obviously policies are going to be now more affordable.
Okay, got that. Let me also pull up some of the other key sectors that we could be discussing there. Renewable energy names, Mitesh ji, how are you looking at that? Because the sector stands to benefit because of lower taxes on solar cookers, solar water systems as well, and related plants. Those have also slashed to 5% from 12%. How would you look at an Adani Green, KPI Green, Sterling and Wilson for that matter, or a Tata Power?
Hello. Am I
Yes,
audible?
Mitesh ji. Yes, go on.
Yeah. So I think Adani Green is out of the basket which you have discussed. Adani Green is looking pretty interesting. I think 920, above 920, it's a clear-cut breakout. So now, slowly, gradually, the stock is again 980 and 1050. So definitely one can go ahead and form a long position in Adani Green. Apart from that, what is looking interesting is Wari. If you look at the chart pattern of Wari, since last 4 weeks, it is forming a heart of our bottom formation, and now very close to its all-time high of 3,743. The stock is trading at 3,200 around. So I think in Wari also one can go long at the current level with a stop of around 3150 for the potential target of 3,500, 3,700.
Got it. Avinash, let's talk about the agri space. Fertilizers, agrochemicals, players like UPL, PI Industries, Rallis, are they expected to gain because of GST on fertilizer assets, biopesticides now reducing to 5% from 12 or 18%? Some of these products were also in 18% as well.
Yeah, I think, see, companies which operate in the domestic space, companies like Rallis, or for that reason, UPL, Charda Cropchem, Sumitomo Chemicals. I think the domestic market is a very large opportunity for agrochemical companies. And I think, this year, fortunately, the agrochemical market has recovered compared to last year when it did not do well. So I think the market has also improved. The climatic conditions are also good. Typically, for the agrochemical companies, the first half is a very strong period. So you'll see a very strong September kind of quarter also. The second half is definitely slightly moderate, but with prices coming down, I think affordability will increase. So I think, companies which operate more on the domestic market, Sakshi, will benefit significantly. That is some point which the investors should make a note of.
Got it. Okay, Avinashi, also I wanted to understand from you, when it comes to the banks, what are the benefits that are coming to the banks and the NBFCs? We are seeing both Bajaj Finance, Finserv also pulling up higher in trade, because more demand will mean more financing in this festive season as well, for maybe tractors, for two-wheelers, for four-wheelers as well, and even for consumer durables for that matter. So banks, NBFCs, what do you think is going to be standing to benefit the most?
No, I think both the banks and the NBFC, Sakshi, would benefit, because see, companies like Bajaj Finance, Bajaj Housing, or typically banks, which are mainline banks like SBI, or for that reason PNB, a Canara Bank, and even private sector players like ICICI Bank, Axis, demand for credit is now going to grow, because as consumption grows, you're going to see a lot of demand for banks in terms of the credit availability. And I think credit growth had taken a backseat, it had slowed down. So hopefully, I think, this consumption kind of wave is going to obviously help most of the banks which have got a very good retail franchise. So I think you're going to see a lot of action in the NBFCs as well as the banks. I think clearly, we could see visibility in these kind of banks numbers, possibly from the December quarter numbers. Then I think you could possibly see the banks making a good amount of growth on the volume as well as on the value side.
Okay, got that. Well, thank you so much then, Avinashi, for being with us on the program and helping us with all your insights. We definitely hope all of this will definitely make viewers take a better decision as to which are the sectors and stocks that they need to focus right now. Always a pleasure to have you. Thank you so much. All right, Mitesh ji, let me also dig a little deeper when it comes to some of the other sectors. Auto sector, I want to understand how are you looking at the benefit? within the auto sector, are you more bullish on two-wheelers because the benefit coming from the 350cc and below, the demand for that segment particularly? For small cars, again, there was expectation that the small car segment could benefit the most. There were also some analysts estimates that the prices could get reduced by 8 to 10% odd for the small cars as well. Vis-a-vis the luxury cars, which are still put in a 40% bracket, but small cars and two-wheelers, and tractors for that matter, how are you looking at the opportunity there?
Yeah, so Sakshi, this entire move of GST was, I think, priced into, and the signal has been clearly given by two stocks which we have discussed, I think, before 3 or 4 weeks. That is Ashok Leyland and Maruti. And post our discussion, both the stocks have flied like anything. I mean, Maruti is trading near to an all-time high. So I think our bullish stance stands for these two stocks going forward. First is Maruti. We are of the view that the heart of higher bottom formation in Maruti will help the Maruti to sustain or achieve the higher levels going forward. So we are looking at least 5 to 10% upside from the current level as far as Maruti is concerned. Again, as far as the Ashok Leyland is concerned, I think whether GST will impact the stock or not, that's a different story. But chartically, that is looking pretty interesting. And we are of the view that going forward, Ashok Leyland will slowly and gradually march towards the landmark rate of 200. So these are the two stocks which are on our radar. Slowly and gradually, two stocks are also building base, Sakshi, as of now. First is Eicher Motor and second is Bajaj Auto. Now, I don't know how they are directly or indirectly correlated with this GST factor, but I am of the view that both the stocks likely to outperform going forward. So we are also penciling in a very strong upside in two stocks, that is Bajaj Auto and Eicher Motor.
FMCG, I also wanted to understand specifically on ITC, what explains this 2% of a rally there? I understand that it's an FMCG player, but a large part of its volumes actually comes from cigarettes in terms of profitability and revenues. That still has not got diversified. Only the hotels portion is diversified as of now and listed separately. But 2.5% of a rally that we are seeing on ITC at 420 odd levels, do you think what the benefits that will come to the overall FMCG aspect will be much higher than maybe the cigarette impact that they will be seeing?
Yeah, it's a sentimental boost, Sakshi, nothing beyond that. I think if the Britannia is going to go up, if Nestle is going to go up, then ITC said, why not I? So I'm not going to go up by 6 or 8%, but definitely 2% on a lighter note. So yeah, it's a sentimental boost, Sakshi, nothing beyond that. So what we are looking at, a trend reversal comes only above 430. So if the stock sustain above 430 technically, then there are strong chances that it's gone for a reversal, and then we have 480 and 520, and then we can talk about an all-time high as well. But so far so good. It's a sentimental boost. Above 430, it's a clear-cut reversal. One should pay attention only if the stock closes above 430 on a daily basis.
Okay, got that. Let me also dig a little deeper and understand from you when it comes to some of the other spaces. Some sectors have actually now slipped after the initial gains. Metals are down. Remember, metals were shining the brightest yesterday. Oil and gas is down. IT also slightly lower can be seen. What's your thought beyond the GST benefits that are coming in on these core economy stocks, metals, oil and gas for that matter? How would you trade them at this point?
Yeah, very good question, Sakshi. I think metals which you would like to chase as of now, and particularly among them two stocks, Hindalco and Tata Steel. So Tata Steel yesterday has also posted a significant gain. Hindalco is going to post a significant gain going forward. So I think any weakness in metal going forward should be bought into. Sakshi, we have been a big believer in the year 2025, calendar year 2025, that this year is all about commodity. If you remember, I mean, we have discussed this a number of times on the show. So I think going forward, we also believe that sugar, fertilizer will also come into the play along with cotton. So I think all the commodity related stock will burst significantly going forward. Along with this metal space and the oil and gas which you're talking about, I think the entire PSU basket is also coming back. So RVNL, Rail Vikas Nigam, IRFC. So all these stocks are also going forward looking pretty promising. So I think sooner than later, the PSU basket will also come into the picture, particularly if you look at the entire chart pattern of NMDC in Coal India. Slowly and gradually, they are building base. So yes, we are of the view that apart from the GST buzz, I think PSU stocks, commodity stocks, are the stocks or the sectors which you should look at.
Okay, got that. Hold that thought there, Mitesh. Let me also welcome another guest on board. We have Mr. Amit Chabra joining me. He's the Chief Business Officer of PolicyBazaar.com to give us an understanding of what he thinks the GST rationalization announcements would impact and whether the end consumers will be able to benefit from any premium costs that could come down as well. I think that's the key question that all the consumers would have. Amit, good morning to you. Thanks a lot for taking the time out this morning. So first up, a complete exempt on both individual life and individual health insurance, and also reinsurance has also been included in this ambit. How are you looking at? What's your first reaction there?
Sure, I think this is the best thing that could have happened, from a common man scenario. And I'll just look at the bigger picture here. One, see, India is still developing its social security fabric, right? There's no social security like there is, let's say, in the US or in some of the developed markets. Hence, the need for health insurance and life insurance cannot be, it just cannot be told how important it is. Today, if there is a large medical expense that somebody has, or if there is if there's a death of the earning member of the family, then the entire families get,
Got it.
totally.
Yeah.
So that is where this removal of GST is an extremely impactful thing, because it means that both health and life insurance becomes more affordable now.
So what you mean to say is it could definitely help in deeper penetration of insurance in both life as well as health, because so far we do understand that we are very under-insured country in both the aspects. So do you believe that can actually definitely be put forward? And secondly, help me understand on the affordability factor.
Sure, so the same thing, right? So one, definitely, people will now be more inclined to buy individual life and health insurance because it becomes cheaper. That's one. Second is, it also brings in a lot more awareness, right? Because if you look at the penetration of health and life insurance, it's still a fairly small number in India. I think the finance minister is saying that, the government wants to give a big boost to the sector and they want more and more people to buy health and life insurance. I think it will bring in a lot more awareness. And more people will buy. That's one. To your point on affordability.
It will make insurance affordable. Can you give us some sense of what is your analysis saying? How much more affordable could insurance get both on life and health aspect? What is the average ticket size right now that one has to shell out for a premium, and what could be the benefit, just for a broader understanding?
Sure. So of all the averages, let's say in a health insurance for a family, the average ticket size today is around 25,000 bucks. Which means automatically there is a 4 to 5,000 rupee saving, as the tax gets removed, there is a 4 to 5,000 rupee annual saving that every customer automatically gets. So on the health insurance side, that is the rough idea that one could look at. On a term insurance side, let's say if there is a 1 crore term insurance bought by the earning member of the family, say about 40-year-old, there again you could expect a saving of 2 to 3,000 rupees per annum. So it's a fairly significant saving that one gets with no impact on the benefit that you were already getting from insurance.
Okay, help me understand on the insurance companies' perspective now. We were given to understand that most of the companies had preferred a 5% GST rate, and they were skeptical on the exemption part because they were not sure whether the input tax credit loss will be able to make up for it. But tell me, what is the benefit now with the reinsurance aspect also coming into the ambit? Do they save some costs there, or is there still going to be some pressure?
See, I think I would say it's a bit of a short-term view, I feel, because so more than reinsurance, I feel the benefit that insurance companies will gain is from the overall increase in penetration. See, the way insurance works, it's about pooling risks, right? And it's about getting in more and more volume, more and more people buying insurance solves for, this small factor around input tax credit. So I think in the longer run, definitely the fact that more people will buy insurance will more than compensate for this small loss of input tax credit. So I won't worry about it too much, to be honest. And there is no immediate loss anyway. So the entire 18% benefit does get passed on to the customers immediately.
Fantastic. Amit, thank you so much for your time this morning and helping us understand the impact on the insurance sector as well as for the consumers at large. Mitesh, coming back to you and help us understand, what is your understanding on some of the insurance stocks there? Would you prefer any of these insurance stocks now that the benefit is coming in there?
I prefer as of now. So at 609, definitely it's a case of a buy. And going forward, the stock will test 710, 720, and after that, probably marching towards an all-time high. So yeah, at 609, I definitely would like to go ahead and buy ICICI Prudential.
Okay, got that. So those are the insurance companies that we could definitely be looking at. Anything else apart from the sectors that we've just discussed with you, Mitesh, that you would like to highlight for our viewers?
I think hospital stocks are buzzing, Sakshi, and that is where we need to pay a lot of attention to. So if you look at even the Apollo Hospital now at 7869, that is looking promising. I think Syngene is also picking up a bit of a space. So Syngene is also looking promising at 665. So I think hotel space and garment space is one space which we should.
Right. Okay, I think there's some connection issue. We'll again come back to Mitesh in a moment. I think 196 points of an uptick that we can see on the Nifty right now, 24,911. A lot of healthcare stocks is what he's marking out. Hospital stocks, names like Syngene are also in focus, at least for now. Let me also highlight for you what else is sticking as far as the broadest market is concerned. You do see a lot of names like Mostip Technologies, that's now 14% higher in trade. You have names like Escorts, Kubota, Atul Auto, that's also higher. Electronics Mart India, again with the hope of more consumers flooding to the such marts where there is a multiple showcase of various products from consumer durables, from smartphones. A lot of people could be flocking that place. Flair Writing Industries we had marked out already for our viewers. A lot of those stationery related products could get cheaper. Those are the stocks that are higher. But let's try and understand now from an indirect tax expert perspective as to how to look at these GST rationalization. Let's welcome another guest on our board. We have Gauri Chadana joining in on the program. Hi Gauri, good morning, and thank you so much for taking the time out this morning to decode for us the announcements that have been made late last night. Of course, it was like, adrenaline rush when, the entire half an hour of announcements coming in from the press conference yesterday, and just trying to understand which are the sectors that are going to truly benefit. But help us understand from an expert view, what do you make of this announcement of a two-slab structure? An additional 40% slab for sin goods and for luxury goods, and also what do you think of the revenue loss that everybody is talking about to the government?
So, Sakshi, I believe that it's a great step, and the industry demanded this since so long. Of course, it's a big step. However, now when we see that there are sectors like insurance sector, wellness centers, gym and restaurant was already under this compliance where we had 5% GST rate with no input tax credit. We will take some time to understand how much benefit is actually being passed on to the consumer, because in this case the benefit exactly won't be as the rate cut is, because we will definitely push some benefit, push some GST credit which we were taking earlier, and the burden will now be on the consumer. So
Right.
Definitely there will be benefit to the consumer, but on a lower rate. And for other goods, definitely where the slab has been cut from 28 to 18 and from 12 to 5%, we will definitely see a surge in the demand. And now from Navratri, 22nd of September, because this is being implemented, and there are a lot of people who are holding on to their purchases. I'm one of them. We'll go out and start making our purchases. So initially, I feel that there may be a revenue drop as the government is also anticipating, but eventually I feel that there will be an increase, because when the government reduces tax rates, the consumption increases, and over a period of time we'll see the consumption increase, and when the consumption will increase, of course the government revenue will also increase.
Absolutely. So we have to give it time for the entire impact to be seen on both sides, at least for now. But given that this is a big consumption boost, it will be positive in the longer run, is what you mean to say. But one has to understand that a direct cut in taxes will not mean that your end user price will get deducted by the similar amount. That's one takeaway that all the consumers must have, at least at this point in time. You know, a lot of industries, Gauri, were worried about the loss of input tax credit. Now, of course, all of those details you must be already reading out through the documents that already has come out, where input tax credit will still be there and where it will not be there. Help us understand, where do you think the industries tend to lose the most?
My biggest concern would be that wherever, the restaurant industry, which was already under this criteria, then
Yeah.
now wellness centers, gyms, insurance sector. So my biggest concern is that initially, if we talk about the pre-GST era, the main concern was cascading effect. Because of the cascading effect, GST was introduced, where we were supposed to see a seamless pass through of the input tax credit. Now, with time, if we see there's a blockage in credit chain, maybe we will again feel that there is a cascading effect. Although I think it's too soon to say anything, but definitely in these sectors, we are blocking the credit chain. And if tomorrow we move a lot of other sectors in this criteria where we are giving flat rate of 5% without input tax credit, I feel that the whole concept of GST might fail in a way. So maybe passing on the credit at a lower rate, a lower output tax credit would be a better option, like they have done for other industries. All the consumer goods have been reduced from 12 to 5%.
Yes.
So that is a great decision. But whereas the wellness centers, gyms, insurance sector, and earlier the restaurants were concerned, I have a little hesitation on that, because I feel that the credit chain is being stopped, and these chains like gyms and wellness centers, they are usually on rented places. They pay huge rental amounts with lot of GST, 18% GST they are paying on the rentals. Then they are taking a lot of other goods, like they are purchasing ACs, refrigerators, laptops, and a lot of stuff. So
Sure.
all of this credit will be now blocked. So maybe at times, few of these chains might feel that their input is more than the output at times. I mean, this could be the possibility also.
Got that. Last couple of questions that I'll address with you, Gauri, for our larger audiences is, one of them is, large part of understanding was that with simplification of GST, with lesser bands of GST, there could be increased amount of compliance and ease of doing business as well. How much of that do you think coming in with a two slab structure and a 40% sin goods and luxury goods tax?
Definitely, the ease of compliance has been the also the agenda, which I can see, because the registration process is also getting easier now. Probably we'll get the registration in 3 days in non-red flagged cases, and only 2 rates, and so all of this, definitely the compliance burden will reduce. And another theory also says that if the compliance burden on the SSC is reduced, the compliance increases, and so does the revenue collection. So it's a great step. Already in GST cases and in GST department, there are a lot of issues which the taxpayers are facing. So gradually, I think the government is looking into it, and now the registration will also become easier. In fact, there are more provisions which were announced yesterday, like 90% provisional refund, which I think all are in the favor of the taxpayers. And because of all these measures taken in the yesterday's meeting, I think the compliance will reduce on the taxpayers, and they will now go ahead, apply for GST numbers, because I know a lot of people who were afraid of GST and they were not ready to enter into that GST racket. So that fear will go away, and people will now go out get GST numbers, start their businesses, and also do the compliance up to date.
Absolutely. Lastly, Gauri, just about 30 seconds to a minute before we wind down this show, help us understand when it comes to what else do you think the government must address after the simplification and the rate rationalization has been announced?
Ultimately, I think the goal should be to make GST also faceless, like they did for the income tax. Now, because there is no faceless scheme in the GST department and GST litigation and all, so there's a lot of harassment which is happening in this sector. Now, when we talk about income tax, we've seen a change, and because of the faceless scheme, taxpayers are now very happy with the department. Now, when the GST also will become faceless, I'm sure it will take a lot of time, but it will definitely help a lot now.
Got that. Thank you so much, Gauri, for being with us on the program and helping us decode what GST rate rationalization means for the economy at large and how will it really benefit a lot of sectors, whereas some clarification still needs to come in respect to some sectors as well. Thank you so much. Appreciate your time right here bright and early in the morning. And we'll now continue to give you viewers all the insights on markets throughout the course of the day. So continue to stay with us as we get you all the top voices that you can look forward to understanding from what GST rate rationalization will mean for those sectors and how as an end consumer are you likely to get benefited starting September 22nd. 24,912. Let's wind up the markets for the morning edition. We're still about 200 points higher. Most of the sectors that are holding up with autos, FMCG, financial services, real estate and consumer durables up by over 1%, whereas top stocks are M&M, Bajaj Finance, Nestle, Eicher Motors and Grasim. So cement, autos, finance and FMCG, those are the pockets that are reflecting a big cheer on GST bonanza that has been announced overnight. Stay tuned with us throughout the course of the day. We'll catch you soon.
Well, Maruti Suzuki has come out with its Victoris SUV, and I'm joined by the managing director, Mr. Hisashi Takeuchi. Takeuchi,